Hi everyone, welcome back to Eagle Eye Stocks. Today we are understanding the gold price, which is on the massive rally. It recently reached $4,000 per ounce barrier, and everyone are asking two questions: whether it's too late to get in or will there be a downfall later. In this video, I will give my honest opinion whether one should invest or not, and exactly where I think the price is headed next, what I will do when it comes to investing in gold. So stay till the end and you will get a complete knowledge of investing in gold. We'll look at the history, the pros and cons, some smarter alternatives as well. So if you're new here, make sure to hit the subscribe and tap the bell button. I have got more awesome finance and investment videos coming up your way. Alright, let's start with what's happening right now. Gold in 2025 has been on an absolute fire. It's literally breaking records after records, and for the first time in history, it's crossed more than $4,000 per ounce, which means gold is up more than 50% just this year, which is insane for a commodity that usually moves slowly. So, the big question is, why is gold rising like this? There are few major reasons, and once you hear them, you will understand why the gold price is rising like this. The first reason is the investors are nervous. There is inflation risk, geopolitical tensions, economic instability, and global risk, which make people to feel to run to gold because it's considered safe money. And guess what? That fear is driving huge demand. Secondly, central banks and the ETFs are buying gold like crazy. Also, this is a big one most people don't even think about. Central banks around the world are increasing their gold reserves, meaning even governments want more gold. On top of that, gold ETFs, which makes investing in gold super easy, are seeing massive inflows. So it's not just retail traders, the big players buying gold as well. And also, gold doesn't pay interest or dividends, right? Which most of you already aware of. So normally, when interest rates are high, gold becomes less attractive. But if real interest rates are falling, suddenly gold looks better. Plus, when the US dollar weakens, gold usually goes up, and that's exactly what we are seeing. Let's be honest, when something starts running, people jump in because social media is talking a lot about it, also on the news headline, and everywhere it is hype. So, more and more investors pile in, which pushes it even higher by creating demand. It's that classic fear of missing out momentum. But to keep in mind is that when something moves up this fast, it can also pull back just as quickly, and sharp rallies often lead to corrections. So, even though gold looks unstoppable right now, we have to stay smart and not chase blindly. Okay, then why do people even invest in gold in the first place? Because if we understand the role of gold, gold is one of those things that has been around forever, right? Like before stocks or crypto or even banks, and even ancient kings were flexible with gold. And honestly, the reason people still invest in gold is that it's very simple. Gold makes them feel safe. When the world is shaky, like markets crashing, wars, and inflation, people start thinking, oh, where do I park my money so it doesn't disappear? And boom, they go to gold. The cool thing about gold is it doesn't really go to zero. A company can go bankrupt, a currency can lose value, and even real estate prices can drop. But gold has this reputation of holding its value. It may not skyrocket all the time, but protect you when everything else is falling apart. That's why people call it safe haven. Another reason people like gold because it's not some number on screen. It's real physical tangible wealth. You can literally hold it. It's not controlled by any government, any bank, or even any CEO. So If people don't trust the system, they trust gold, especially during inflation. When money loses buying power, like groceries getting more expensive, gold often rises. So it acts like a shield. Plus, big players invest in it too. Central banks, governments, billionaires, they all hold gold. And when people see that, they are like, okay, if the big guys are stacking gold, maybe I should too. It adds confidence. But let's be honest, gold isn't a get rich quick thing. It doesn't pay interest, it doesn't give you dividends. It's more like that emergency backup plan. It's like having a spare tire in your car. You hope you never need it, but you are thankful that it's there when things go wrong. And people also use gold for diversification. Like instead of putting all their money into stocks or property, they add a little gold just to balance things out. If one thing drops, the other might hold strong. It's a way of saying, let me spread my risk. So, yeah, at the end of the day, people invest in gold because it's trustworthy, steady, and a battle tested by history. When life gets unpredictable, gold gives you peace of mind. It's not about being flashy, it's about being prepared. And that's why gold will probably always stay in the game. So, then what are the risks in current gold rally? Even though this gold rally looks exciting, it comes with bunch of risks. If you're thinking of buying gold or if you're already invested in gold, then these are the things that you must watch out for. First of all, when things go up, there is also chances of falling back, which lot of analysts are warning exactly the same thing. And also interest rates. If central banks get aggressive and start raising interest rates, it can make real yields go up. And that's what the bad news for gold because it doesn't pay interest. Basically, if you can get a better return somewhere else, people might move money out of gold. And so, gold can become less attractive. And also, a stronger dollar is danger. So, if dollar rebounds strongly, it can push gold prices down in the local currencies. A strong dollar can make gold more expensive for international buyers. You can see USD trends on Investopedia as you can see on your screen. And also, don't forget profit booking. At these high levels, some investor who bought earlier might start cashing out. That can create a downtrend pressure, especially if many do it simultaneously. And also, gold doesn't pay interest or dividends, so you don't earn anything while holding it. You only make money if the price goes up. Unlike bonds or dividend stocks, it doesn't guarantee income. So, in times when these assets looks attractive, people shift their money out of gold to these stocks. Finally, liquidity and technical support levels matter. If price breaks key support lines, momentum might accelerate downtrend, and in volatile markets, liquidity can dry up, making sharp moves more extreme. So, in short, this rally could continue, but it's riding on a big bets about interest rates, inflation, and risks. If any of these bets turn wrong, or if people change their mood, there could be a downtrend, which is still a possibility. So, what's the conclusion? What is the big question that everyone is thinking about? Should you invest in gold or shouldn't invest in gold? And honestly, there isn't a simple yes or no. It's not one size fits for all. It really depends on you, your goals, your timelines, your risk levels, and what you believe about where the economy is heading. So, let's break it down in a super simple, easy way. First, ask yourself, what's my goal? Are you investing for the short term, like trying to make quick profit, or are you thinking long term, like for years? Do you want growth, or do you want to protect your money from inflation or crashes? Because if your main goal is to protection and stability, gold makes sense. But if you want fast growth, gold might be slower compared to stocks or businesses. Next, look at your portfolio balance. What do you already own? Are you heavy in stocks, bonds, real estate, or crypto? Gold is a great for diversification because it often moves differently than everything else. So, adding a small amount can balance your risk. But if you put too much into gold, remember it doesn't pay interest or dividends. So, you don't want to overload yourself with an asset that and just sits there and doesn't guarantee income. And if you think inflation will stay high or central banks will cut rates, global tensions will rise, then gold can become more attractive for you. So, what is my opinion when it comes to investing in gold? Right now, gold has strong tailwinds: inflation, uncertainty, geopolitical risk, central banks buying, all that supports gold. But I also see that the risk of pullback if rally gets overheated. So personally, I would go with the modest allocation like 5 to 10% of the portfolio, which is enough to hedge, but not so much that I would invest everything into gold. And also, I would watch what interest rates are doing, what are the dollar doing, how investors are feeling, and I would be ready to trim if the trend starts reversing. Gold can be a smart part of your portfolio, just don't go crazy. Use balance, be patient, time your entry, don't chase hype, and think strategically. Hope that makes clear. If this was helpful to you, hit like, share with someone who needs to hear this. That's it for this video. See you next time. Please let me know your thoughts.